Even though US equities S&P 500 is not that far from a record, we've only actually gained about 4% since January 2018 when the tariffs started being imposed. And if you look at investor sentiment, I mean, loads of measures, but I've been looking at the State Street Global Markets monthly index, which shows that investors are sort of the most cautious on equities since the financial crisis. It tells me a lot of money is waiting on the sidelines to be put to work. Is your money part of that money waiting to be put to work in US equities?
Part of that money, not all of the money. Thankfully, we have quite a bit of money in equities in general and US equities in particular. Equities are climbing a wall of worry, and that's good news for equity markets. It's good news not because we are about to see a magnificent sort of revaluation in prices and multiples are going up the roof, but it does suggest that it will be very difficult for us to see the kind of melting down for equity markets, i.e. a 20-30% sort of correction. I think there is enough people that have been waiting to go in, and that would be a support for markets. Having said that, I wouldn't sort of take this reasonably bullish indicator, whenever the market is very worried, it's always a good thing, as the evidence to just pile up on cyclical growth equities. The environment still remains quite sobering. We see an absence of growth drivers. We see a lot of debt in the system as well. We see central banks worried for a reason. And I would suggest that we are a bit closer to the kind of environment where you still want to be in equities, but you want to be slightly safer equities that perhaps will have an income component to them, as opposed to equities that are going to potentially provide you with significant capital gains.